Hey everybody, welcome back to the channel. If you're new here, this is just me updating on my TFSA that I opened earlier in the year to start a passive stream of income with primarily focusing on dividend growth with just a little bit of growth stocks thrown into the mix. So if you want to follow along with the journey, you can like, comment, and subscribe to the channel so you can catch any updates I have and any stock reviews or just overviews on my holdings and why I pick them. I did one already for why I bought Apple, why I bought Intel, and a little bit on Alibaba. So recently we went up to 32 shares of AQN, so we bought 2 more shares just because it went to the low 18s, and I just think it was completely oversold. So it seemed like a pretty good deal, and we got our cost basis down on it. I also purchased a little bit more Apple fractionally, so up to 2.2%, so 20% of a share. We're currently working on getting another one slowly over time. Usually I try to use up my deposit, try to buy as many shares of positions I want to build, and then if there's a few dollars left over, depending on if it's a bank or Apple or whatever, if I think it's a good deal, I'll just toss a few dollars. So because we use Wealthsimple Trade, you can build positions using fractional shares. Even if you only have like $1 left over, or $2, $3, you can toss it into your core holdings and start compounding your money, get bigger dividends, just reinvest your dividends right back into your holdings, or if a better opportunity comes along, put it towards that. We were watching, and I also added a bit more Intel, so we're up to 4 shares of Intel. So last month we started with just the 1 share, now we're up to 4, so I'm pretty happy with the position where it is, just a little shy under 4% of our portfolio. I'm going to hold off on buying more for now, just because they are planning to release a new product, so the 12th generation CPUs for desktops. And we'll see how those go, because if it's a good launch, it may shoot the price of the stock up. That's why I wanted to load up on it now, just because I think it's a very good price and a very good value currently, in my opinion. And I don't want to risk it, going up to 65 and not having a partial position or most of my position filled up. So in the event that Intel goes down, I'll just keep at a dollar cost averaging down. Love doing that in any one of my holdings. And just for Alibaba, it's actually recovered. It was down as low as 140, but then mainly just due to negative news coming out of China and the Evergrande crisis as well over there with it's a large real estate developer in China, and they are very afraid that they're going to default on their bond payments and their loans, and it could cause a lot of financial hardship for the Chinese economy. So it kind of tanked all the Chinese stocks. It had nothing to do with Alibaba. In fact, I kind of wish I bought the dip, but we didn't really have any money when it was in the 140 range. But that's fine. I'm happy with the position in Alibaba. I want to keep it at around 3%. I still think this company is undervalued. There's really nothing wrong with the fundamentals of the company. It's just a lot of fear about China and their government cracking down on businesses. But I do think this is the best business in all of China, and that's why I have a share of it in my portfolio. So we'll see what happens with it. I'm not too worried if my stocks go up or down, because I've done my research into the company. So if something were to go down, like Couche-Tard's went down a little bit, that's fine. I'd love to get more shares of this as well. So if something goes down a couple percentage points, I will get more. And we also added a bit more DFN. So this is our income fund, just because it dipped below our initial cost basis. So just kept getting a couple more shares here just to build up our passive income in the portfolio. And then for the dividend income that the portfolio has provided, we've currently earned $156.12 in dividends so far. Our annual dividends are $422.74. Monthly, we're up to $35.23, Weekly, we make $8.13. Daily, we make $1.16. So we're still working on our goal of earning $2 a day in the portfolio. And the portfolio value has just crossed the $7,000 mark. So we are on our way to hitting a $10,000 portfolio as well, which is another landmark that I want to achieve probably within maybe 6-7 months. I should be able to get that amount, but we'll see how long it takes, or if a holding of mine just goes up. And our annual dividends are at 6.21% average. On the watch list, since the market's recovered, I don't see anything too appealing here. Nintendo is not far off from where I want it to be, but unfortunately can't buy it on Wealthsimple. You can't buy all stocks on there, but you can buy most of them, and a lot of the popular ones you could buy fractionally, like Microsoft, Shopify, Apple. That's why I'm building fractional shares in Apple and the Canadian banks. They're just core holdings of mine. I just want to increase my positions in them. I'm not planning on selling shares of them anytime soon, if ever, just because I believe that over the long term, they're going to grow and keep giving me more dividend income over time. So thank you so much for watching the video. Feel free to use my link in the description below for Wealthsimple Trade. You can get the value of 2 free stocks if you use the link, and it can help you start on your own journey.